Alright guys, so now we are very soon ready to take a look at an amazing MACD trading strategy, which is MACD Divergence. But before we can look at all of these different divergence strategies, we first need to learn about the two different types of divergences. We need to learn about the difference between histogram divergence and MACD line divergence. So basically, as I said, there are two types of MACD divergence. First of all, we have the histogram divergence. And the histogram divergence typically provides faster signals, while the other type, the MACD line divergence, can generate more significant signals. So if you guys take a look at this chart right here, you can see that we have the price on the top and we have the divergence on the bottom. And we will talk more in depth about divergence very soon. But in very simple terms, a divergence is when we see the price going in one direction and the MACD going in the other direction. We have a total of 4 different types of divergences that we will talk about soon. But for now, what I want you guys to see here is that the MACD divergence starts here earlier compared to the line divergence. So when we talk about the MACD line divergence, we are looking at the difference between this high and this high compared to this high and this high. And when we talk about the MACD histogram divergence, we talk about the difference between this high and this high, this high and this high. And as I said, for now, all you need to notice here is that these divergences will not happen at the exactly same time. Many times the histogram divergence signal will appear sooner. It's actually possible here to use both divergence types at the same time, and this can actually provide even stronger signals. But alright then, so now let's take a look at the different types of divergences and how you can trade them. And let's begin here by taking a look at the bullish divergence. As you guys can see, here on the top we have the price. So the bottom line here is the price, and the lower line here is the oscillator, which in our case is the MACD. And the reason it says oscillator right here is because divergence principles can be applied to other indicators as well. For example, the RSI indicator. And guys, I actually have a full 1 hour long course on the RSI indicator. So if you guys have the time, I highly recommend to watch that video after you have seen this one. But now let's take a look at the bullish divergence here. What we are looking out for when we're looking out for a bullish divergence is, first of all, we want to see the price printing lower lows. So for example, here we have one low and then a lower low. And at the same time, we want to see the MACD printing higher lows. And one thing that is very important, especially for beginners here, is that when we are talking about bullish divergence in general, we are always looking at the lows. So for example, we look at the low right here, we look at the low right here, low and low. It's important to not confuse the lows with the highs. When you are looking for bullish divergence, both the bullish divergence and also the hidden bullish divergence down here, you're always focusing on the lows. So if this sounds a little bit confusing right now, don't worry, divergences can be a bit tricky in the beginning, but hopefully the bullish divergence will be much more clearer after we take a look at this example. Alright, so let's take a look at the bullish divergence. Here you can see we have the price on the top here, we have the MACD on the bottom. And in this case, to make the example more clear, we are only looking at the histograms. But as I said earlier, what you learn here can be applied for the MACD line as well. The first thing we want to do when identifying divergences is that we need to identify the highs and lows here of the price. So for example, you can see right here, we have a low, we have a high, low, high, and low. And as you can see, in the first case here, we have one low and then the price prints a lower low, right? But now if you look down to the MACD, you can see that the MACD prints one low and then also a lower low. So in this case, we can see that the MACD and the price goes in the same direction. This right here is what we call a MACD convergence. But what about the next low? Well, if we look from this point down to this point, we can see that once again, the price prints a lower low, right? But if you take a look at the MACD, we can see that the MACD actually clearly prints a higher low. So in this case, we have lower lows on the price, higher lows on the MACD. This right here is a bullish MACD divergence and indicates a reversal to the upside. Another interesting thing I can just point out right here, do you remember what the MACD means? Well, it means moving average, and as you know, the MACD line is calculated by moving averages. But then we also have convergence, and now you know what convergence is. Convergence is this part and this part when the lows of the price and the lows of MACD goes in the same direction. And now you also know what divergence means. So now at this point in the course, you basically knows the full name of the MACD. But alright guys, so now let's switch the attention here and take a look at the bearish divergence. And what is very important when we talk about both the bearish divergence and also the hidden bearish divergence that we will talk about later on is that when we talk about bearish divergence, we are always looking at the highs. So for example, here you can see that the price prints a higher high while the indicator, which in this case is the MACD, prints a lower high. It's important to not confuse the highs here with the lows. But now guys, let's take a look at a real life example of the bearish divergence. And now guys, let's actually make this an exercise. So if you want to, I want you guys to look at this chart and try to identify the bearish MACD divergence. If you need some help, you can of course play back the video and look at the bearish MACD divergence. But now pause the video and try it out. Did you guys manage to find the divergence? Well, let's take a look here together. First of all, let's try to analyze the highs and the lows of the price. We can see that we have a sort of low all the way down here. The price went up, printed a high. This is a bit tricky, but one could argue that we have a low right here. You can see the MACD also printed a tiny low at this point, but then we printed a higher high once again. And if we take a look from this high to this high, we can see that the price prints a higher high, right? But if we look down to the MACD indicator, we can see that we have one high and then a lower high. So we have lower highs on the MACD histogram. When we have the price printing higher highs, while at the same time the MACD is printing lower highs, this is what we call a bearish MACD divergence, and this indicates a reversal to the downside. And if you guys look very closely at the price to the right here, we can actually also see something else, right? One could argue, you can see we have a low right here, and then we have a lower low, right? If we see this as an individual low, you can actually see that the MACD all the way down here prints a higher low. So here we have one type of divergence as well. However, preferably we want the mountains to be more separated, like we for example have right here and right here. And in this other case, you can see that this sort of mountain we have right here is almost like part of a bigger mountain. So that can be one thing to have in mind. This can still be considered as a divergence, but one could argue that when the mountains are clearly separated here, the signals are more clear. So now guys, we are ready to take a look at the hidden bullish divergence. And from my own experience and also of course hearing from other traders, the hidden divergences can often be sort of much more trickier to spot. So make sure to really pay attention now. But first of all, once again, when we talk about bullish divergence, it doesn't matter if it's the regular bullish divergence or the hidden type. When we talk about bullish divergence, we're always looking at the lows. But for the hidden bullish divergence, what we want to see here is now we want the price to print one low and then a higher low, while at the same time we want the MACD to print one low and then a lower low. So as you guys can see, this is pretty much the opposite of the regular bullish divergence. Let's take a look at an example. Alright, so here we once again have a chart, and the very first thing we want to do is that we want to identify the highs and lows. So all the way down here we have a low, the price came up, printed a high, we printed another low right here, high, low, another high, a low, and so on and so on. And since we're looking out for bullish divergence, we want to focus here on the lows. So if we take a look at the first two lows here, from this point to this point, we can see that the price clearly prints a higher low. And if you switch the attention down to the MACD, you can see that we have the MACD printing one low and then also a higher low. So here we have the lows of the MACD and the lows of the price going in the same direction. This is what we call a MACD convergence. But if you take a look at the next low, we can see that from this point to this point, the price clearly prints once again a higher low. But if you go down and focus on the MACD, we can clearly see that the MACD prints a much lower low. This right here is a hidden bullish divergence and indicates a continuation here to the upside. So one key difference between hidden and regular divergence is that the hidden divergence indicates a continuation of the trend. So it indicates that the trend will continue, while remember, the regular divergence indicates a reversal. And you may wonder, why is this even a bullish signal? Shouldn't it be a bearish signal that we see, a strong negative momentum on the MACD? Well, not really. The reason this is a bullish signal is that even though we see such strong bearish momentum, the price is still maintaining higher lows. So this is basically why it's considered a bullish signal. Last but definitely not least, we have to take a look at the hidden bearish divergence. And this divergence type is very important because it can signal that a bearish trend will continue to the downside. And once again, when we look at bearish divergences, remember we are focusing on the highs. But in this case, in order to identify the hidden bearish divergence, we want to see the price printing lower highs. So we want to see lower highs on the price, while at the same time we want the oscillator, which in our case is the MACD, we want the oscillator to print higher highs. So as you guys can see, it's pretty much the mirror image of the regular bearish divergence. So here we have an example of a bearish divergence, and we actually also have another important divergence happening on the chart. So if you guys want to, you can actually try to identify on your own both the hidden bearish divergence, but also take a look at if you can find any other type of divergence here on the charts. So pause the video right now if you want to. But alright, so let's begin here by analyzing the trend. We see in this case we have a pretty clear and nice downtrend. We have a high, clear low. We have another high, we have another low, high, low. And if we take a look from this point to this point, we can clearly see that the price prints a lower high, right? But if you look at the MACD, we can see that the MACD has a high right here, but a higher high right here. So the MACD clearly prints a higher high, while we at the same time see a lower high on the price. So this is a bearish divergence, which indicates, remember, it indicates continuation to the downside. And after this point, you can clearly see that the trend continued here and printed lower lows. But now if we instead focus here at the lows, we can see something very interesting. We have one low, then a lower low, then yet another lower low. But if you switch your attention to the MACD, you can see that we have a low, we have a higher low, and then we have yet another higher low. So in this case, we actually have a triple divergence. And what type of divergence is this? Well, this is a triple regular bullish divergence. And we can see that after this divergence appeared, we actually saw a strong move here towards the upside. And another important tool here you can use, a good idea is to always combine divergences with other tools such as, support and resistance, price action, and market structure. And one very important thing you can see about this move is that the price after the divergence actually broke above the resistance of this whole downtrend. This video was just a short clip from our full MACD indicator trading course. So if you want to learn more, simply click or tap on the screen right here to watch the full video. I hope to see you guys in the full course very soon.